Top stories on Breaking Views this morning. HSBC's results look like the best of a bad bunch, and the minority shareholders of Chinese e-commerce company Alibaba.com shouldn't give their treasures away too cheaply, says Breaking Views. With me is Chris Hughes. You're being pretty tough on HSBC. I mean, let's face it, it looks pretty good compared to a lot of the other big banks, I guess because of most of its business is not with Europe or the US.
I don't think we're being tough on them, actually. I mean, this is a bank which is trading at a premium to book value. There aren't many banks around that have that kind of valuation. And we acknowledge what's going for it. We're saying, look, it's got scale, it's got diversification, it's got good management. I mean, it had a bit of a boardroom chaos last year, but you've got a stability there. You've got a decent chairman and CEO, and they've got a good strategy, and they're turning it around. However, what does that add up to when you look at these numbers? And even with all that going in its favour, you still got a bit of a mess here. And the fact is that the Eurozone crisis does appear to be the most sort of powerful driver in these results. It basically means that the good elements of the results in Asia, and actually even in parts of the investment bank appear to have had quite a good fourth quarter compared to some of the numbers we've seen elsewhere in the banking sector. In spite of that, the real driver here is the Eurozone crisis, which is weighing on the European business. And there's very little that you can do about that. At the end of the day, HSBC is a bank like any other, like the other banks. It faces the same challenges, and there's only so much you can do to overcome that kind of pressure.
So that's John Foley's point. It is, after all, just a bank, along with all the others, and it's muddling through this Eurozone crisis like all the others.
It's doing more than muddling through, but look, the flip side of diversification is that they've got a big exposure to Europe as well. So, they're not just the Asian growth story, there is also the Eurozone crisis to contend to. And, they are clearly sounding a pretty cautious note about the continuing impact of the Eurozone crisis going forward this year. I mean, we have the sense that the really acute moment of the crisis has passed, which is probably right, but that doesn't mean that the banks that that are lending to European companies and other European banks are suddenly out of the woods, and it's going to weigh on HSBC for some time. So what we're saying is that even though there are many reasons to justify the premium valuation, that doesn't mean this is going to be a gangbusters investment this year.
All right, and then this other story out of Hong Kong, Alibaba.com. You say the minority shareholders should hold out for more. I mean, Alibaba is something we've talked about before, but what's the gist of the story here?
Well, look, Jack Ma, the founder of Alibaba, is looking to buy the company back, take it private. But we're not convinced that the offer there is really full value. I mean, if you think about it's still only a third of what it floated at. Now, clearly the company's valuation and stock market value has been all over the place since it listed. But compare it, say, to Amazon. I mean, you can get to much higher valuations than this based on its operational performance. So right now we'd say the minorities should be quite careful about being shortchanged there. It should hold out for more.
Okay, Chris, many thanks for that. Chris Hughes. For more agenda setting insight, watch our US Breaking Views show every day, 12:30 Eastern, 17:30 GMT. I'm Axel Threlfall. This is Reuters.